Welcome back to the weekly stock portfolio update videos. This week, my stock portfolio is sitting at over 131,000 AUD. That's made up of over 71,000 in my stake portfolio and over 60,000 in my Vanguard portfolio. Between the two, you can see none of my big holdings have changed, and I plan to just update you on how things have been going. I just invested even more money, over $2,500 into my portfolio, so I'm really using this time to buy the dip. So today I'm going to be going through what I've been buying recently, how it's been going, and my long-term outlook. So as you can see, my portfolio is up 1.6% today, which is a good day. So up around $1,000, which is pretty big. Other than that, you can look at some of my bigger holdings such as Amazon, which is sitting at around $11,000 in market value USD. And that's up around 2.5% today, so a really big day. Next is Google, up 4% today, so that's really good. Another one of my big positions at $10,600 USD. Microsoft is flat, 8,200, and then VOO, which just tracks the S&P 500, is up 0.7%, so average day for VOO. In terms of my Vanguard portfolio, it's had a bit of a rebound with my VGS ETF. What VGS is, it's just an international shares ETF that tracks 1,300 companies, I believe it is, globally, excluding Australia, with a heavy weighting towards the US. I think it's around 70 to 75% weighted to the US, with many of the big giants that I hold in my other portfolio as well. And that's around 60 grand. So I've been able to build this position up to around 406 shares now, and I've been consistently dollar cost averaging over a long period of time. What this means is my dividends are getting bigger. Any dividends I get are just reinvested back into the portfolio, and it means I've been able to accumulate a lot more shares as I've kind of built this over time through the ups and downs of the market. So to go into where I've been investing, so the first place I've been investing was Amazon. So I've been investing, I think it was around 3 grand recently into Amazon, or maybe 2.5, 3 grand. And I saw this as an opportunity. If we look in the last month, the stock is down around 9.3%, and it's down in the last 6 months as well. So it's had a bit of a rough week. I mean, it's had a bit of a rough month, but it's had a very positive week. So the stock is up 5% in the last week. And I was using this time to buy in at under $200 a share. So you can see my average buy price is around $202. So I'm up around 4%. So not the best currently, but it's allowed me to build out a big position in Amazon, at least big for my standards, at around 53 shares. And I think long-term, Amazon is still the play for me. Whilst it's had a down year, if you look at the last 5 years, it's still up, but it's not up as much as many of the other Magnificent Seven. And I believe it has a lot of run rate. So as you can look at, Amazon's PE ratio is sitting around 28 at the moment. It's historically been as high as 60. It went through periods where it was extremely highly valued. Whilst that PE ratio has come down, earnings per share has gone up, and the company just seems to be in a really strong position. So whilst it hasn't had the best time recently, I'm using this as an opportunity to buy into Amazon and really build this position, because I think long term, the white collar side of the business with AWS, it's already experiencing very strong growth. And then you look at the blue collar business as well with its delivery services. I think a lot of this can be impacted by AI with automation, which will hopefully make Amazon a more efficient company, which will hopefully result in better returns for the shareholders. The next company I've been investing in is Microsoft. Microsoft is the second company I ever invested in, I think after Apple, and I've held this since. So it's been a long journey with me in Microsoft. This is probably one of the lowest I've seen it trade at, a 25 PE ratio. I remember when this was close to the 40s, so it's really come down. I don't think anything material has really changed in Microsoft's business. Yes, there's a lot of fear around its CapEx investment, which is rightfully so. I think shareholders should hold a company to account on the decisions that they are making. But I think long-term, Microsoft has such a strong business model where it's got such sticky revenues. It's integrated into basically any corporate you go work for. They're using Microsoft's suite. Obviously, their investment into OpenAI, I'm not really banking on that. Any benefit from that will be a nice to have. But I think even if you just look at Microsoft's core business, you look at their cloud services as well, I think Microsoft is a great company for me to hold long term. You can see my average share price is around 356. This has gone up with my recent investments. Like I said, I did invest around $2,500 into Microsoft. So it's really boosted up that total equity. And I'm sitting around 20.6 shares currently. So that's kind of the two investments, the main ones I've been making. Last is Google. Google I haven't invested any more money into. If you've seen any of my other videos, I spent a lot of time buying into Google a while back. So back when it was in the dips and was really low here, that's when I was heavily investing into Google. You can see my average share price is around 165. So I built up this position back here, and then I was fortunate enough to go on this massive run, and that's why my Google position's up over 90%. I'm seeing a similar thing now with these other stocks where they had a massive pullback due to macro factors. Google had some micro ones with the lawsuits and antitrusts and things like that, but long term I didn't think it would be a big effect. And you can see Google stock has really shot up, and it's still only trading at a 28p ratio. When you look at their AI models, I think are brilliant. Gemini, you look at their Google Cloud, I think is great. You look at YouTube, I think it has more watch time now than Netflix. It's the biggest by far. You look at Waymo. I think Google's just a great company for me to be invested in long term. So that's why Google's one of my other biggest positions at 10,600 USD. And then last is VOO. So VOO just tracks the S&P 500. If we have a look at the last 5 years, you can see it's done quite well, up and to the right, steady compounding over time. I haven't invested in VOO in a very long time because I've been investing in VGS in my other portfolio. But you can see I'm up around 50% or nearly $7,000 with an average buy price of $421. So I believe it's around 40 something percent of my portfolio. Yeah, 41%. So the majority of it is in a broad market tracking ETF, which I think is good for myself, as I don't think I'm some amazing investor. I do enjoy picking stocks, individual stocks. Over time I've held many different stocks like JP Morgan, McDonald's, Goldman Sachs, Apple, Meta, all these stocks, and these have kind of simplified my portfolio into less positions now, but I still enjoy picking individual companies and kind of going on that journey with them. Next is VGS. So in terms of my Vanguard portfolio, I've really been building this back up. So previously this was as high as 64,000, but I sold around 16 grand or 12 grand because someone's reallocated back into the portfolio. I used to own another position called VLC, which tracked the largest 20 companies in Australia, but I decided to liquidate and get out of that position as I didn't see the long-term growth prospects. It paid a very strong dividend, but I'm not a dividend investor, so I'd rather focus on capital gains. So I sold out of that. It's also helped buffer up my cash position for eventually when I go for a house deposit as well. But yeah, this is how this portfolio is looking. I'm happy to get it back over 60 grand. Now we're on the progress to get it to 70, 80, 90, and hopefully 100 one day. And yeah, my main position is currently VGS. I did look at another position. So VGS compared to the same, it's VGS, it has the same holdings, but it's hedged because the returns of VGS has actually been flat. This is delayed, so it says 6.5, but it needs to be updated. Because of the currency difference from the AUD to the USD. The Australian dollar's done very well against the USD recently, so it's kind of wiped out any of the gains. But what it does mean is when I'm buying into this position, I can buy at a cheaper rate because the Australian dollar is getting stronger in a sense. But that's just how things have been. I plan to just keep these positions because I try to keep a long-term outlook on my investments. But that's kind of how they're weighed up at the moment. If we have a look at my Excel spreadsheet, you can see the weightings here. You can see my American portfolio is kind of split into the 4 pieces, whilst green, which is VOO, is still the biggest. You can see the others are 22%, 21% and 16% respectively, so all kind of similar sizing. And then my Australian portfolio is just the 1. Over time, you can see my portfolio's gains. This gets updated at the end of the month, so obviously this hasn't been updated as you can see the last figures were 57 and 69,000, so this will go up a lot due to my recent investments. But you can see that's just the power of investing long term. Even when there is downtimes like recently, that compounding over time and you building that position through dollar cost averaging, dividends, extra deposits, does really work in the long time. It's really easy to get caught up in the short term and see the ups and downs of the market. But if you can keep a long term outlook, for me at least, that's really helped. Regarding dividends, I did mention before, all my dividends are reinvested back into the portfolio. So at the end of each month, I'll update this. So in February, we'll see if I get any dividends. I won't get anything from my Vanguard portfolio, but maybe something from my stake. But again, yeah, I'm not a dividend investor, so I'm not too worried. Last year, I set the goal of hitting $2,000 in dividends, and I did. But since then, I've reallocated parts of my portfolio, sold things. So my dividends will definitely be lower this year. overall, that's all for now. I wanted to keep getting continuous and building progress on my weekly videos after I did take a bit of a break. Thank you everyone who watched my last video. It was over 400 views, which is pretty good for me. So happy to keep doing this, and feel free to share how your portfolios are doing during this time of volatility.